evening, everyone, and welcome back to King B's Daily Podcast. And this is our Spotlight series where we put a company under the spotlight. And today we're going to look at Greatland Gold, or GGP. And we're going to use this as a learning opportunity where I can give you a bit of metals and mining experience, what to look out for, when to invest, and use this as a really good case study and look for risks, the hope behind it. I think it's a really good project for investors. And then, track the metals and mining curve against the Greatland Gold chart, which I'm going to do now. So, as you can see, looking at the chart here, it spiked around Christmas in 2020. Then it's kind of had mini spikes all the way down. It's 80% up in the past month. It's gone from 6p up to nearly 11p. So you can see where it peaked, and then an all-time low of 6p roughly. And it's still 328% up on the all-time low, and it's 6p low recently. So when should we invest? We're going to do that now. I'm going to now give you the metals and mining curve that I talk about a lot on my podcast. And as you can see, it's the same, very similar sort of spike, trough, spikes, troughs. And I'm now going to put them over each other, and you can see how very similar they are. So what we're going to do now is go over a timeline of events back from November 2020, and I'm going to show you really where we could have invested as investors, or invested, and I call it agile investing. We believe in Greatland Gold, but actually we're here to make money. So we invest, we sell, and buy back again, because we still believe in it. We're just trying to make more money as a result. Some people just hold because they just don't want to think themselves as traders. We're not traders. I'm an investor, but we need to make sure we invest at the right times. And actually, if we hit our targets, don't be afraid to sell and buy back. So where could that have happened? When should we have done that? And we can sort of track that right now. So that's why I start in November 2020, because they then start acceleration of early works on Havieron Gold. And what I will say is, I'm going to focus on this asset because I think it's the biggest and best asset for them. But they're not one-trick ponies. Lots of stuff going on, exploration work they're doing. They're doing a great job. And fair play to the management. They're working very hard. They're doing a lot of great work, which a lot of companies should be doing and following their example. Because do you know what? They're doing the drilling they need to do. They're doing PFSs, pre-feasibility studies and everything. They're doing the right work at the right time. So congratulations to them for doing the right thing by their company. It's just about investors. We need to choose the right time. So they have basically working with Newcrest with a loan agreement of 50 million, and 70% of the funding will come from Newcrest and 30% from GGP. Why is that important? Because 30% of all this drilling cost is loss. Okay, you need to understand when you invest in a metals and mining company, you're going to be basically people, unless it's a JV or a sort of debt other ways, you're going to be picking up the cost through placings or some sort of other way, or there's going to be a sort of share price suppression somewhere, because it's going to cost a lot of money now to get it out of the ground. Now you'll see why there's a spike. Ready? So great. So funding starts. Okay, so the shareholders start getting excited because the funding is coming in, and there's a sort of JV agreement between Newcrest and GGP. Getting excited. Then you get the first inferred. Now inferred is the lowest form, really. You got probable, which we really want. So we've got inferred, lowest form, but the crescent part of the asset is 18 metric tons at 3.8 grams per ton of gold. There's copper too, but I'm not going to focus on that in this podcast. And then the breccia part of it is 34 metric tons. Are at 1.1 grams per ton. Now, again, I did some sort of bit of research before doing this, and I sort of backed it up in a few places. And actually, they're saying anything sort of 2 grams per ton up is good, and then obviously 5 grams up is looking really good, isn't it? And the things that really move markets are 20 plus. But it's not just about grade; it's about the width of the drills, and we'll go on to that in a minute. So, but they do say it's open, so as in it can keep going and it can expand, and I'm sure it will, and it has as I go through all these dates. And yeah, it's inferred resource. It's a great start. And you can tell the shareholders are now getting really excited. And you can see the spike around Christmas, and now we're in December 2020. Then again, in December 2020, you get some drilling results. Again, for those less experienced, you're going to read these drilling results and you're going to hear words in RNSs saying, high grade, this is brilliant. We've done a really good job, and they've done some drilling. But what I want to do is drill down into these bits so we all learn from it, okay? 205 metres, so good width. Now, what I want to say is all widths are generally greater than true widths. Now, true widths is what we're going to actually use to make money on. The widths we give aren't the true widths. So because of the angle and different things that's happened. So you need to also take that into account. Now I've selected just a few. Okay, 205 meters, good width, 1.2 GT, not brilliant grade. 31.8 meters, not great length, 3.1 GT, good grade. So, you can see there, can't you? Now, 65 grams per ton of gold is absolutely incredible. However, it's only 2.8 meters long, in terms of wide, sorry. So you're not going to, that's not earth-shattering. You've got to get them both together. But you're going to say it in an RNS, aren't you? You're going to say it's high grade. Of course you are. But, again, there's some really good drills there. I'm not knocking it. I'm just saying we need to learn from RNSs and really drill into it and ask questions. Like in our group, we genuinely say, is this good grade? Can you tell me more about it? And there's always someone in our group willing to give some experience behind it. We're not geologists, but we've seen enough RNSs to know and do our own research and go and find out, whether this is good grade and good width. Then a mining proposal on 29th of December. So again, there we go. There's the spikes. Then the work starts at the 21st of January 2021. And you can see from the curve in front of you, the work starts. It goes from spike, discovery, and then into this orphan period where, you're going to spend a lot of money to get it out of the ground. So drilling results, again, 9.8 at 37 metres, not good width. But they then have a shares issue, a block listing authority in February 2021. And I went back to that. It's 225 million warrants at 2.5p. And they can exercise that up to 27th of August 2021, which they ended up doing. Right, next up. We then sort of skip quite a few months because I thought, I don't want to go over every single month for you because you're going to end up going, this is really boring. So I've skipped to June 2021, a few drilling results again, 85 metres not good, 13 metres not good, 14 metres not good. You see 32 grams per tonne, absolutely incredible. But again, it's not just about grade, and it's something I want to sort of go on to really. Then we get a PFS, a pre-feasibility study. They've taken the probable resources. Do you see what I mean? Probable's really good, and it takes a lot of drilling to get to probable. So what they've done is focused their drilling into a small section to increase the likelihood of it being correct. And that's what probable means. So they're doing a staged approach. They're talking about 27% IRR. I talked about that in my Prem spotlight, so you want to maybe go back to that and check that because there's a bit of learning experience there too. 3 years payback, 4.58 grams per tonne. Now, that is pretty decent. I said anything over 2 is good. Anything over near 5 is really good. So it's good, isn't it? Overall, as an average, that's really good. So fair play to them. I would like to know how they've really figured that out in terms of grades and what the drilling that they are. But that's probable. So I'm fair enough to them. Brilliant. They talk about 17% coming from copper. I haven't really focused on that in this podcast because I think the gold is the bit that, is easier to understand sometimes, and I can explain that. There's a 9-year life of mine, 14 metric tons of probable resources, and they haven't put in the inferred stuff that I talked about because you can't prove it, and they can't put that into PFS. Then, here we go. This is the bit where you start learning when to sell, okay? Now, personally, I would have sold on a spike because a discovery spike is always the biggest with metals and mining because everyone gets very excited and sentiment's high. And then the work starts and it costs a lot of money. And 30% to Greatland Gold for all exploration activities is a lot on a massive asset like they have. Then they said in the next 12 months they're going to do 90,000 bit of drilling for growth, basically. And that's amazing. Fair play to them for putting that in an RNS and doing the work. Like I said, I always got respect for companies that go out and do the work that they should be doing for shareholders and for the company. So fair play to them. 18th of November 2021, the placing, 7.4 million. So here we go, look. Do you see what I was saying about they need money? Well, that's 7.4 million. And then December 2021, another 82 million shares were put to the market. March, really good positive RNS. 53% up in gold content, 63% up in indicated mineral resources. So inferred, indicated, probable. July 2022, this is when it starts getting really interesting. So they're saying now we've got to sort of the equity split between Newcrest and GGP, which I looked at, and it's now at the sort of 70-30 point now, that they then can have a 5% option to increase their stake, but it's set at £60 million. Because they're saying all the work they've done, fair play, they deserve to be rightfully given money for this, to be able to, fair value for what they've done the work on. And I think, yeah, they're right. I think the asset has massively changed through all the work they've done. And I think, therefore, they should get sort of recompense for all their work they've done. So they set at that. Now, this is the bit that's the bit I want you to remember, because when I come on to right at the end and the results, you'll see that might be the thing that saves and gives more hope. So August 2022, equity. November 2022, more shares. January 2023, another block listing application, 74 million shares. So can you see how, if you invest at the wrong time, you would have basically been part of the drilling campaign, and you would have supported the company through the drilling campaign, through equity raises, and through new shares into the market, therefore SP suppression. Now, that's not a bad thing. I'm not, we all have to invest at some point in shares. It's just at that point in time, you need to understand that after the discovery phase, it takes a lot of money to get it out the ground. Then 11th of August 2023, we're getting near the date now, guys, don't you panic. They've done 80,000 worth of drilling. Like, brilliant. That's absolutely epic. They've done a really great amount of work. And again, hats off to them. Then they've put some decline work in, again, to dig deeper and find out what's going on underneath ground and see how it's extending, which is all brilliant, but all costs a lot of money. Then Newmont, there's a takeover of Newcrest, so a bit of a change of name coming up later on. But there's 10,000 metres of drilling to go. Remember I said about 90,000 in total? There's 10,000 to go. And that's the little nugget I've picked up on because of what I'm going to sort of talk about in a minute. So then some employee incentives, 11.9p at 63% premium at the time in September 2023. I said it's about 80% up recently. So, it's not 63% premium now. It'd be interesting to see if it did get to 11.9p and then what happens, because they're going to get their incentive options given to them at that point. Then sort of September and October, they then exercised options. Straight after that RNS, they've exercised some options, which I thought was strange. But it brings money into the company, which is good. 6th of November, results. Now, this is where I'm going to really dig in. So present day, pretty much, isn't it now? The results. Okay, so they've said they've raised through equity raisings of 63.3 million. That's a lot. So can you see now at the curve, equity raising of 63.3 million pounds. So obviously that it costs a lot of money to drill, and shareholders are basically part of the company. Really, they've been supporting the company, but it's been value increasing in terms of the asset, but SP declining. So the market cap might not change because of the hard work they're doing and the asset increasing and lots of things, but the SP will get, go from the spike and be sort of quickly brought down really because of all this equity placing. 33 million's gone to Wyloo, which is their cornerstone investor. I'll come back to Wyloo later. They got 8.5% of the business. Now, There's a 50 million standby loan facility, and I'm going to come on to that into a minute. Now, I found some really interesting things in this RNS. Alex Borelli exercised his 19 million options in that period and sold 10 million of them. Clive Latcham exercised his 2.7 million options and then sold 2 million of them. Sean Day was issued 72 million options, 7.3 million retention rights, 3.8 million performance rights on top of the 12 million performance rights he already had. Now, do you know what? Like, fair play. They are working really hard. They deserve retention. They deserve performance. But to exercise them so quickly brings money into the company, which is good. But that makes me think about funding for this 10,000 worth of work that they're going to be doing, and how the split is working between Newmont, the new word, and Greatland Gold. So then I thought about it. They got 31 million in cash, great, but 41 million in debt. But the assets is 52 million. So at least they're doing well, because the debt is underneath the assets, which is always good. And they got cash. So if you put the assets plus cash, you've got 84 million there and 41 million in debt. So good. You know, it's a business that's not going to go under because they've got at least the assets to back them up just in case. And the other bit, remember I said, was that 5% option to go to, if Newmont want it, can give them 60 million in the bank. You know, there might be some negotiation in there, but you know, that is the bit that I want to say is the current real hope, because I think the kicker, unfortunately, might be this access. They talk about in the going concern statement, and how they talk about in the results. They talk about the fact they have access to a drawdown of 50 million. Okay, with Wailu and their work they've done there. So the other things they talk about is they can decrease their operating costs, they can raise additional funds, and reduce expenditure on their exploration programs. So what they might do is stop exploration and work on all other assets and really focus on Havering, which I think is actually a good idea. I think they should do that. I think it's all well and good increasing asset bases and asset costs, but it shouldn't be at the sacrifice of shareholders. So I think that actually they should just really focus on this asset, get it to profit, because it's the nearest profit it seems in terms of all the hard work they've put into it. And I feel that unless they get that 5%, they're going to need a drawdown. Now, this is why I don't think they're out the orphan period yet. You know, I was saying about the curve. I don't think that they're there yet. I think it's great that they've gone up 80%. I think it's brilliant. But it's about whether there might be more equity raises. I know they've got 31 million in cash, but you know, they seem to be spending very quickly. And I think that they might look at this drawdown or raise additional funds. So it's just, you know, excitement's there for GGP, and I can see why. The assets are blooming brilliant. You know, I am really proud of the management team. I think they've done a great job. I think they've worked really hard. But this is about investments, isn't it? So what I'm saying is the risks are funding. The risks are this drawdown facility. 50 million is quite a lot of a drawdown. Now the thing is then it's going to issue shares with that. So that's going to be share suppression, isn't it? So will it get to, I'm just chucking out a curveball here, will it get to 11.9? Performance rights issued. Drawdown then happens after that once the options have been brought in. I'm just chucking out some slight curveballs just to maybe think about moving forward. So that takes us to the present day. Now, hopefully everyone saw, you know, looking at the curve, looking at what I've talked about, that discovery into big drilling phase. Then we need to decide, can you see where it's dipped? We need to decide whether this mini spike is that next bit, or is there more orphan period to come? And it's just a mini spike in that sort of range. So a little summary for you. I hope you've enjoyed it. I hope it's been a really good learning experience. It's been really nice going through the RNS. It's been really nice covering a company that's working really hard for their shareholders and for the company. But there's some things that we just need to make sure we focus on as investors to make us more money. And I hope it's been a really good learning experience. So thanks everyone. If you've enjoyed what you've heard, this sort of stuff we talk about in our group, the largest UK Telegram group around, and research-driven debate. The link is in our description. Thanks everyone. Have a great evening, and I'll see you on Monday.